The next few days in the markets are expected to be really volatile. We have the Fed meeting coming up, and we have earnings for a bunch of the big tech names, such as Microsoft's earnings, which come out on Tuesday. We have Meta's on Wednesday, and Thursday we have Apple and Amazon. So this week, in terms of earnings, we have a heavy schedule for the big tech names, which have driven this stock market higher this year. And the dollar index is strongly bouncing off of this 104 level yet again as we approach the Fed's July meeting. This is July 31st. It's a Wednesday, and the FOMC press conference will have everybody's attention as people try to gauge whether or not the central bank here in the United States, the Federal Reserve, is going to cut interest rates in September. There's been lots of speculation here with an election around the corner and geopolitics all over the world that are still rising in tension, right? Whether it be the Ukraine theme or the situation over in Israel. I mean, there's just so much stuff going on all at once. And in this video, I'm going to break down where I'm currently positioned, what I'm doing about all this stuff, and what I will do if things change. Let's jump in. Welcome back to the channel, guys. As we get started, I do want to just mention that if you're a regular viewer, don't miss our 50% off sale on the Edge Finder right now. We are currently doing half off the Edge Finder. You can get access to all of our data and tools. This includes the top setups algorithm page, our data scanners, the COT data that many traders love to look at, and so much more. You can get access to this tool and use it anytime you want. It is a one-time fee to purchase this tool, and it is a tool that is available on the cloud. So you can take this wherever you go. You can use it on multiple devices. All you have to do is log in. It is super easy to use, and if you don't already have access to it, today's your chance to get it for half off. Now, in the description down below, there is a link that will take you to a spot where you can chat directly with a member of my team who can get you set up for access for actually a extra discount. We're doing 55% off for people who send in a message. The reason we do it this way is so that if you have any questions about how the tool functions, or you just want to know some more information about it before you purchase, we want you to speak with someone on our team that is capable of answering those questions before you purchase. So take a moment down below in the description. It's the first link. Chat with us directly and get access to this tool for 55% off, our biggest discount of the year. So the first place I wanted to start today was the dollar index, which really made an impressive bounce off of this 104 level, and actually tricked me because I thought we were going to go lower here at this 104 zone. You can see we came down to this level, and this level, historically speaking, has been a really very strong level for dollar bulls. And then we saw this candle right here, which showed a lot of strength for sellers. And I thought we were going to go lower from there. Well, I was wrong, and we saw the dollar index actually bounce back pretty strong. And today we're seeing a little bit of follow through to the upside. What is causing this, and is the dollar looking bullish from here? Well, I'll tell you that for me personally, I am still overall pretty bearish on the dollar index. This upward trend that we had seen going on for most of the year seems to have cracked, and at the very least, changed into more of a range-bound or sideways directional trend for the time being when we take a look at price action. One thing to notice about this is that we've not necessarily broken through the highs, but we've also not convincingly stayed below the lows. So we're just kind of in no man's land. And as we approach a big Fed meeting on Wednesday, I think we should probably wait, at least in my view. I'm going to be waiting for confirmation one way or the other from the Fed what's going to happen next with Fed funds rate. Now, in regards to the meeting that is happening on Wednesday, there's a very small chance that we get our first rate cut on Wednesday, just a 4% chance according to the Fed Watch tool. But if you take a look at September, this is where things get really interesting. Now, this is saying that there is a 100% chance that the Fed will ease interest rates, meaning bring them down from their current levels of 5.25 to 5.50. That is 5.25 to 5.5%. They're expected to bring it down with a very strong probability in the September Fed meeting, which is a couple months away. So the market seems to be gearing up for its first interest rate cut from the Federal Reserve. But the question is this 10%? What is this telling us? Well, this 10% chance is saying that in the September meeting, there will be 50 basis points eased from these current high levels that we're at, which is really interesting to say the least. So the market thinks that the economy is meaningfully slowing down, not crashing or falling apart at this time. But if we get increased or accelerated slowdown in the economy, it's possible that we see a more aggressive cut from the Fed in September, perhaps a 50 basis point cut could occur. It's definitely not out of the realm of possibility. So why is the dollar index up then if they're expecting interest rate cuts, which are usually pretty bearish for a currency? Well, it's because a lot of the other central banks seem to be willing to cut more aggressively. For example, the Bank of England, which reports on Thursday, is slightly favored to actually cut its interest rate this week. Now, with the pound actually falling off of its highs and pulling back to this 50% level, we're going to either see this be a very interesting bouncing opportunity, or if we see something very, dovish, maybe a rate cut and perhaps guidance that there will be further rate cuts this year from the Bank of England, something unexpected could cause this to break down and kind of fail out at this upward trend. But as we pull back to this level, it'll be very interesting to see. The pound USD from a technical perspective looks very good, but personally, I don't have enough of a conviction to actually go buying the pound against the dollar because the top setups algorithm is not generating a bullish setup for the pound. In fact, if we include the neutral readings, we can see where the pound is on this list, and you can see that GBP USD is right here at neutral, so it's only getting a +3. So not getting enough of a convincing score when looking at the economic data, technical, and sentiment data on the Edge Finder to give me a bullish setup. So gonna stay out of the way on the pound dollar. While we're on the top setups page, let's take a look at some charts that I do like a little bit more, such as the Dow Jones. I am currently long the Dow, and if we take a look at US 30, we can see, if we go over here, US 30, seeing a little bit of a down day on this one, but I picked this up last week at the retest of this 40,000 level. I stand strong in the idea that I do think that the Dow has more upside to go, and so I am long here with a stop loss below structure. If this week we see poor earnings or a Fed that seems more, hesitant to cut interest rates this year, if that happens, it is possible that the Dow Jones could see a complete reversal, in which case I would stop out for a loss. So I'm telling you now, up front, when I do these videos, I try to avoid hindsight, because hindsight is really dangerous in the trading community. Everyone wants to talk about winners, and no one ever wants to talk about trades that are going poorly. But I'm telling you now, this is my positioning going into this week. I think that rate cuts are likely coming, and that keeps me favorable towards the Dow, and not just me, but our system that tracks economic data. The Dow is a favorite on the Edge Finder because interest rate cuts are expected to come into the picture, and you can see that reflected in our scoring system. This is the purpose and the power of having an algorithm to assist in helping to find ideas. So with that said, also, like I mentioned earlier, this is currently 55% off, so don't miss out on the discount that is available using the first link in the description. Let's take a look at some more charts. So the UK 100 is an interesting one that popped up today. So let's take a look at the FTSE and just see what kind of chart we're working with on this side of things. So the FTSE is the UK's stock market, and with expectations for rate cuts to come into the picture for the UK, maybe this one could look interesting. I think that if we actually, do a little bit of a markup here on the 4-hour chart, we might be able to see where we're at with the UK 100. Again, not a chart that I usually trade, but the Edge Finder is giving it a bullish reading, and perhaps we're going to see a little bit of a pullback setup here around this 38.2% retracement zone. I do kind of like the FTSE on a pullback, so we'll see. If this one keeps digging down, we might be able to get a little bit of an entry there, and I could possibly catch the rebound, so we'll see. Also, guys, I wanted to just make a quick plug to this new page that we just put together. It is a1trading.com/brokers, and if you're not already using this page, I want to show you something really cool. So if you're looking for a better broker based on which country you're in, each one of these pages has special sign-up perks for traders from different places. Now, these specific links, we've worked out deals with all sorts of different brokers for people on our website. So if you aren't using a1trading.com, there's a bunch of free tools, but on top of that, based on what country you are in, you can find some great offers. You can see all these unique offers that we've put together with brokerages that you can find available on our website. Again, head over to a1trading.com/brokers and just select which country you're in, or select by product, and you can find some great sign-up perks available with each one of these brokers that we've worked out with. Now back to the video. We are also getting bullish readings for the US stock market, the S&P 500, and although I'm not long the S&P 500, I am long the NASDAQ, which was a bullish reading on the Edge Finder, but has since gone to neutral. So you might ask, well, what do you do in this situation? Well, I am still long the NASDAQ, and I liked the setup, which was giving me a bullish reading last week. If something changes, and we actually go into a bearish reading, or price action just fails out at this level, then I will just stop out and move on from the trade. But the S&P 500, with a pullback recently of about 5% from its previous high, I think that there's a good chance that we see some buyers continue to look and buy this dip. So what would nullify that idea? Well, probably if we took out the lows, similar to with the NASDAQ. If we see this kind of move, then I'm probably wrong about that idea. But I'm watching the S&P 500, I'm watching the Dow Jones, and I'm watching the NASDAQ. I like the indices to the long side, and I'm positioned for upside there. If I'm wrong, I'll stop out. Now this reading, US 10T, this is the US 10-year Treasury bonds, and we're getting a bullish reading on this. Again, a rate cut trade idea, because if you see rate cuts, then bonds are going to usually go up in value in that circumstance. So I'm already long on this one. I've been in this trade for, at this point, actually months. This is more of a position trade. You'll see there's not a stop or a target on this trade. It's just something I'm keeping in the portfolio. But if this squeezes higher, that would be fantastic. And at some point, I would like to scale out of this trade, but I've collected dividends on TLT, which pays a quarterly dividend as kind of its collection of interest that these bonds are collecting. These are treasury bonds on the longer duration side of things. So I am long TLT and continue to have that sitting in the portfolio in the background. Bitcoin also looks kind of interesting. It is showing up as a bullish reading here. Let's just pull up the chart. This would also benefit, I would imagine, from a possible rate cut story. I do think that a reacceleration of the economy or growth in any way due to rate cuts could be positive for Bitcoin, as it is, generally speaking, in my view, a risk asset. It's going to typically go up if markets are optimistic and going to go down if markets are fearful. Until that changes, that's how I'll trade Bitcoin. But Bitcoin pulling back, what I'd like on the daily chart here is, this level here, if we take a look at the daily chart, kind of rejecting this 68,000. If we do see a price pullback, I'm probably a buyer. I've missed this entry twice now, so I'm going to look to try and take it if it does give me a pullback there. But with this big rejection candle, short term, we may see a little bit of a pullback on Bitcoin, especially if the stock market continues to roll over. On the currency front, we've got dollar yen here as a bearish reading. Wanted to look at this chart. So this one, very interesting. This momentum to the upside seems to be kind of breaking down, at least in recent trend. And we've just narrowly missed the 200-day moving average. So we very well may be making this kind of final push lower. But generally speaking, it kind of depends where you are with the economy. Are you a buyer of the yen because you think the economy of the world is going to slow down? You want to go something more stable like the Japanese economy? Or are you thinking that the economy is going to bounce back globally, and in which case you'd probably be more of a yen seller? In fact, I had a conversation with Ivan on the live stream today just about this very topic shortly before he left the stream. So check this clip out.
If my ego is there, I would say it is a buy the dip. The reason for it is that they have negative growth. And if they increase interest rates now, which is 2.8, is very fragile. They don't have support in terms of wage growth so far. It's just 1.9. Like American was 4 point something at some point. So it needs to double itself for me to be, whoa, this is crazy. So I think this is just buying the dip. It's just unwind. Let's see how it goes, kind of a thing. But we are at a turning point for New Zealand. Which has everything is down. So it's just a matter of time when they will start cutting. So back to Australia, counterpart for the Japanese carry trade. I think it will still continue, but I've been surprised this time around that it has been so fast in front of my eyes. And this is the only time of the year or in my life there where you can sell the bottom and still make money.
If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to some new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.